to the closing beat, everybody. Happy Monday. How you doing out there? You having fun yet? I feel like I ask this every single day, but you having fun with this market yet? Welcome to the closing beat. It is a quick stock market update show that we do where we just stop covering the good, the bad. We're basically just focused on ugly, because if you've seen the stock market, it's ugly out there, man. Here's what I'm going to talk about. If you're one of our customers, this weekend, I sent out an email. Last Thursday, I did a class. The 4 things I want you to do while the markets are falling. And it's not just, go buy stocks or whatever. We went through 4 specific things. I want you to focus on that. Get with me if you need help. Unbelievable how many of you actually have gone in and done some of this. And I'll actually say one of them I gave away publicly. It's today's video. It's the reason to rebalance your 401k. And I went through. I shared exactly what we did in our class there. So if you're one of our customers, check the email, check the class last week. You got to take action here. The markets are falling. I get it. I just don't care. I want to take action. I want to know what the opportunity is. So I hope you'll check that out. Hey, we're playing a game. It's called Guess the Dow. Look, wherever you take a guess, you go to jazzwealth.com/guess the Dow. If you could tell me where the Dow is closing, you deserve it. $100 gift card, $100 credit to your account if you're one of our customers. But it's been a wild ride. So our winner last week, of course, gets the gift card on the way. Take a shot. Tell me where you think. Don't think the volatility is going to ease up anytime soon there. So you're welcome to play the game. Our jazz artist of the week is Oscar Peterson. The song is called You Look Good to Me. I just thought that was fitting. The markets look good to you, right? You like these lower prices there. And the bottom line is, if your advisor is running away, he's not helping you, he's not giving you tips and tricks and things to get through this, right here, give us a shot, right? Check us out. Because that's all I'm doing. I'm staying in front of customers. I'm staying in front of everybody. What's the opportunity? Let's make it happen. All right, let's get to the stock market today. That's enough. We've got the Dow down, we'll call it 3,000 points. Have you ever seen the Dow down or up 3,000 points? Doesn't happen. Never happened. It's the first time ever that it's happened there. So basically a 13% drop on the day. We did drop a little bit further than that. Remember, everybody that likes to get hung up on these circuit breakers, we were halted within the first 15 minutes of the day. You actually saw it last night. If you want the lesson there, you actually saw it last night. Overnight, when the stock market's not open, the futures market can trade in what's known as limit up or limit down. And that means that it's not allowed to go any further than, I think, 5% overnight. Well, what happens is in the overnight, when the futures market falls the 5%, you could still buy it. It can still trade. It just, when you buy it, you can't sell it any lower than you bought it. So you could sell it higher if you want, but you can't sell it any lower. So the futures market doesn't freeze, right? But what happened last night, we were down, limit down, essentially right away when the futures market opened, Sunday at 6 Eastern time, and then it didn't bounce. It didn't move. That told you that the pressure was so strong to the downside, nobody even wanted to buy it and take a shot out of bounds. And of course, we open up even lower today. Now, being halted during the normal regular session hours, that's a series of circuit breakers that they put out just in case things get crazy during the day. Well, the first one triggers at 7%, the next one triggers at 13%. You go, why didn't it trigger at 13%? We hit 13%. Why didn't they just shut it down for another 15 minutes? The rule on the New York Stock Exchange, and I believe the NASDAQ is the same, is in the last 35 minutes, it's a free-for-all. They won't stop it. I mean, if you're down 20%, they will. They'll just shut the market down. But anything from 13 to 19.99%, it's a free-for-all. They'll let it go. So we'll see if we get to see a little bit of that action there. Again, limit down first 30 minutes of the day last night, halted the first 15 minutes of the day last night, all on the Fed news. The Fed decided that they were going to cut rates there, 4 cuts, or a total of 100 basis points, or 1 point. So incredible. $500 billion in treasuries they're going to buy, $200 billion in mortgage-backed securities. It's QE4X, if you want to call it that. That's massive. So huge stimulus from the Fed. Now we're looking for Washington here. I mean, that's the bottom line. They're looking for Washington to get something done. But nonetheless, you've got a reason for the markets to go, hey, they must see that the economy is going to get a lot weaker. That's not a good sign. I think I'll sell. That's the mindset out there anyways. So here's the S&P, briefly touching new lows there on the day, but got a little bit of a bounce. And even after hours, Dow, just a tiny little bounce. We're closed now, but new lows there on the Dow. So if you're looking through there, the S&P 500. Now you have to go, I show the futures market. You have to go to something like this. You'd have to look at the index itself. This is what I'm referring to. This is the largest gap down ever in history. And if you're watching for the first time, a gap just means the difference between the prior day's close, which was up here, and the next day's open, which is down here. That gap today between the prior day's close and yesterday's open, 10.45%. That's the largest on record there, which tells you why we were halted so quickly. Anyways, that's the largest gap. Second largest gap came during the financial crisis, October 24th, 2008. 2008 or 9, somewhere in there. October 24th, 2008. Down 8.32%. I remember that. Down 8.32%. That's the second largest gap. So this is a significant gap that we saw down today. Interestingly, if we went back and looked at that week to see 1 week out, how did the stock market perform 1 week later? Higher by 15%. Not 15% from the low, but it recovered all 8% from that second largest gap down ever, which was the first largest gap down ever, and then gained another 15%. I'm not saying the markets are going to bounce here from that sort of stat, but it was really cool to see. Anyways, as of the day's low, I'm going to go back over here to my S&P. There we go. So as of the day's low, stock market was down just about 30%, all right, from the highs. Is that good? Is that bad? Let's take a look here. Here is, I'll zoom in so you can see. Here is the S&P 500 during the last couple downturns, right? So this is the 2003 and 4 downturn in here. We lost 49%, right, from highs. So what I did is I just tricked the chart, basically. I just said, don't show me the performance, show me how far it was from the high. So you're seeing 0 being the high, and these are pullbacks from the high. 49% during the dot-com bust. 56.8 was the lowest point during the financial crisis, right? We're down 28.28%, basically 30% from the highs. So it just gives you an idea. This is not like the worst it's ever been. It's not good, I'll give you that, but it's not the worst it's ever been. The bad news is during both of those declines, those gray shaded areas were recessions. We, in fact, will probably mark this as a recession at some point, but those last two declines of significant value turned into a recession, at least throughout history. It was a short one here, and then you know what happened through the financial crisis if you were playing along there. So that's that one. The bottom line is, here for the market, I think people are overreacting a little bit. You've got analysts coming out going, we don't get it. Even if you factor in a 50% decline in sales and earnings and overall profit margins for a lot of these big companies like Nike, Wynn Resorts, everything like that, you still don't get a price evaluation of where these stocks are at right now. I don't know if you guys are seeing that. Visa came out again and they said, we don't know what you guys are thinking, but it's going to hurt us by 2 to 3%. Not 25 or 30%. That could change, I guess. Everybody's kind of panicking about this, but you don't know. Nike came out and said, after all of this, as of today, this is going to hurt us by 2%. 2% of earnings. So, look at what happened to the price. You've priced in economic crisis, and yet Nike's going, yeah, it's going to hurt by 2%. I mean, bottom line, it's not a good thing. We're billions of dollars. 2% of that's not a lot. I mean, that's a lot of money. But we're at a point here, what I want to point out quickly, and then I'll move on. We're at a point here where there are two things that could and will eventually produce a rip your face off type rally where you feel like you missed out and you will chase, right? Happens every time. You want to know what they are? The first one is any downtick in the coronavirus cases, new cases here in the States. Any downtick. We'll take any good news. Anything that happens there in terms of a downtick in new cases, you're going to end up seeing that rally there. That's my belief. The second one is any Washington stimulus. Any way that they get together and hand out checks to everybody, cut payroll taxes, whatever they decide to do and they're working on, any hint of that in a massive way, not this little $8 billion here or there. I'm talking about a big, massive stimulus from Washington. You will eventually see that come out at some point. But that's what will produce a rally where everybody goes, okay, recognize it. We're oversold here. We just wanted to hear that you guys had our backs. Bam! You will see a massive rally coming out of this. It's happened every time. So we'll see. All right, let's move on to the sectors. I did a little bit more talking there. We're going to move on to the sectors here today. If we go through, not a good day for the overall sectors if you happen to keep them in any order. The home builders had the worst possible day that they could have there, which is really bad. Down over 40% from highs, 20% of that almost basically came today. These are your home builders, right? We actually went to go to open house today. 3 different, over the weekend, 3 different open houses. They were all canceled. People don't want them wanted us coming into their home looking around. We were just looking, right? So Pulte home, you got to imagine people are not necessarily looking to go buy or build a home right now if things are freezing up a little bit, despite the low rates. I don't know. Do you put a mask on and go get a house built? I don't know. Dr. Horton, you got 20% down on the day. Really weak there, just not looking good. And then inside the home builder space, you have not just the home builders, you have, Home Depot, Mohawk Carpet, Floor and Decor is one of them there. These guys have awesome tile stores if you ever get to go, if you're into that. Down 25% on the day, under the assumption of people just slowing down, hunkering down, doing all that stuff. Financials took a little bit of a hit today, not too bad, down 13% compared to some of the other sectors, right? Down 13% on the day. The rate cut, right? You got the rate cut today. That's not going to be helpful for regional banks. So those continue to sell off there. Horrible, horrible, horrible. If we look at the price of oil, almost 10% lower on the day, 9.58%. Look, if the virus didn't take us down, this would have been what took the market down right here. The fact of that there's this oil price war going on, not making really that big of headlines compared to the virus, this would have been the world's focus. There would have been talks of the 70s again, oil crisis, blah, blah, blah. Kind of the reverse, actually. But anyways, that's not really getting that much attention. REITs plummeting today, down 17%, now over a 30% discount off of highs if you're into that. I noticed when I looked through them, you're going to have some of the shopping mall, they were already weak. Simon Property Group, right? People aren't going out and shopping. Maybe some of these stores default and they can't pay their rent, things like that. You already saw some of that. And then some of the REITs that are in the home space, like Invitation Homes, things like that. Those hurt the sector more so than elsewhere. Moving on, you got transportation down today, 11% on the day. A bloodbath there, just a horrible bloodbath. You look at things like Avis, the rental car company, down 20% just today for fun. Because I don't know any of you that are actively holding and scared about, some large position. Just for fun here, that's 75% off of highs. Avis rental car, right? They just had their earnings. They were just saying how well they were doing. 75% discount. Alaska Airlines was pretty nasty on the day, but it did close up off the lows, so that one's not too bad there. You got FedEx in the transportation space as well, closed on lows. That's the opposite. Let's take a look. I didn't notice you guys can't see that. You got FedEx there on lows and reporting earnings tomorrow. So that's going to be an interesting one there for the transportation, though. Wasn't all bad. I don't want to make you scared or nervous or anything. It wasn't all bad today. Consumer staples actually finished negative on the day, but not too bad. About half of the overall losses of the other sectors there. 6.78% there. Kroger stands out, man. Kroger's like the darling of the consumer staples, just really, really strong there. Today adds 1.2% when the stock market has essentially its worst day ever. That stands out in consumer staples. Clorox up 4% on the day. We've talked about this one. We don't have to go over that again. Walgreens Boots Alliance also looking pretty good there as well. I was looking for stocks that just held their own today. Maybe they sold off a little bit, that's okay, but all in all, they held their own. Walgreens sticks out as one of them in the consumer staples sector. If you go to healthcare, not too bad. It did sell off towards the end of the day there, but it did close off its lows, so not horrible. Gold lost 2% on the day, back above the 200-day moving average. So gold is now down 10% off of highs, back in correction territory as well, looking kind of weak there. Okay, you got 2% of the stocks in the S&P 500 above the 50-day moving average. That's 11 stocks. That's not a lot of stocks. You got 0 stocks making new highs today in the S&P 500. 334 making a new low. That's 2 away from a record that we just had last week of 336. Not looking good there. 220 stocks that made new lows in the S&P today lost over 10% in a day. Right? We're just throwing around double digits these days like it's no big deal. 1,000 points on the Dow like it's no big deal. And we're not done yet, so careful. Okay, let's go back over here. A couple things we'll point out as we go. MGM down on the day, closed near lows, lost 33% on the day, now down over 70% off of highs, closing casinos, right? Having to close casinos. I believe they're drawing down on some of their credit as well. They do not need this right now. Capri down 30% on the day, sub $10 now. That's impressive. Over 80% decline off the highs. Just one of the worst there in terms of performers. And then Simon Property Group, we already covered that. 26%. These guys in the mall space. Some of the stocks off lows. Did you see American Airlines added 11% on the day? Oversold here. When the news hits the max and everybody's actually, totally feared, panicking, and toilet paper loaded up, what happens? They sneak these rallies by, and all of a sudden you go, oh shoot, should I buy that? Is it okay? Oh, they're going to get $50 billion in aid from the government? Oh man, maybe I should buy the stock. See how quick it happens, right? Careful, careful, careful. Smuckers, also almost nearly positive throughout this entire ordeal. While other stocks got a ways to go, it's almost positive since the February 19th start point there. So very cool. Anyways, for other stocks, in our email this weekend, I covered some virus stocks that are getting more attention or expected to sort of weather through the downturn as per analyst recommendations, not mine. I dug through almost everything I could find, made a little list for customers. It's in the email if you want to check that out. Just for those of you that are shopping. I know you're out there shopping. Wynn Resorts and MGM closing the casinos nationwide. Caesars Resorts says, as of now, we're going to stay open, but we've got a plan. Here's our plan. You know how the slot machines are all together? What we're going to do is we're going to turn off like 4 or 5 of them and leave one on. Then turn off 4 or 5, then leave one on, then turn off 4 or 5. That's social distancing, right? So that's their plan as of now. We'll see if that continues. Apple going to be closing their stores everywhere except for China, because those are back open. Ford is going to close the plant in Spain. Monster, Monster's doing a $500 million stock buyback. That's cool. Microsoft, Bill Gates, we talked about there already. He's stepping down from the board of directors there. Royal Caribbean, Carnival Cruises doing partial or full suspensions of operations there. And airlines as a whole reducing capacity by 75% and asking for help now from the government. And probably going to get it, to be honest. Old Joe Biden wants to give it to him. I saw that today. Okay, earnings tomorrow, the focus will be FedEx, right? That'll be the main focus there. And you've got dividends coming out from Las Vegas Sands, 79 cents. They're still paying it, right? So it's ex-dividend. You're getting that dividend there. I will take a chance here and try to answer some of your questions, see what I can do, and we'll go from there. Sorry I had a lot to cover today, but I think we got through it. Levo's loving the channel for learning about the markets. Awesome, yeah. It's funny, when it's not as busy, we do a lot of data. When it is busy, it's like we focus on individual stocks and kind of, portfolios as a whole. I like people to see opportunity and not be either greedy or fearful, right? When the markets are going up, everybody's like, yay, it's going up. What's the opportunity? When it's going down, oh my gosh, I'm panicking. No, what's the opportunity? Learn to find the opportunity. Okay. What sectors do best right after a recession? Look like energy, industrial, discretionary, and tech. Consumer staples stands out, and then anything small cap related that weathers the storm. That's not a sector, I understand, but consumer staples stands out as one, at least initially there. You might want to look at some of that data there. Love the discounts, do you? Yeah. Hey, you know what? That's true. One stock I haven't looked at is Tesla. Wow, okay. So Tesla, not immune to this, as you would expect. They essentially halved from the highs there. Wow, $101 pullback today. I saw Elon Musk tweet where he just put, the coronavirus is stupid. That's clever. You think they should reinstate the uptick rule? No, I have a solution. I might be biased here, but I have a solution. If you want to stimulate the markets right now, maybe not the economy, but think about it. Right now, you guys all still have jobs. The economy hasn't fallen to a point where you're losing your jobs and you're panicking. You may be concerned about a virus, but you're not concerned about your job at the moment. Why not come out and say, for the next 6 months, put as much as you want in your Roth IRA or IRA. We're not going to give you a deduction for it. Just fill it. Just have a good time with it. I get it. It's an accounting nightmare trying to figure out what was pre-tax, post-tax, but come on, give them a shot. Just put a new limit on it. Raise the limit for a little bit. I think that'd be fun. I get why they can't do that. I'm just saying, if we're just tossing ideas against the wall here to see what happens, there you go. You like to temper. I was waiting for somebody to say that. So Monday you got 10% to the downside. Turnaround Tuesday, 10% again to the upside. Like I said, we're throwing around 10% like you wouldn't believe. 10% gain on Friday, 10% loss on Thursday. It's incredible. We'll see. The good news is it's going to happen. The markets are going to be open, and we're going to figure out what happens there. We'll cover it there. So I appreciate you guys watching. I'm going to get back to work here. We're helping our customers with all kinds of different things. I love it. So I want to make sure they get everything set. Appreciate you watching. Have a great rest of your day, and we will talk to you soon. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.